Welcome to Accounting High.
In today's day and age, if culture is not part of your strategy, you're going to be eaten alive. The way wages have come, there's not enough people. I've seen too many businesses in every single industry complain that it's just that nobody wants to work, or that this generation's different, or so on and so on. I got to wait for it to go back to normal. There is no more normal. This is the way it is.
And no generation's different. Every generation's complaining about every other generation.
There are 10 million less people in the workforce when baby boomers retire and Gen Z comes in. That's an entirely
different mindset around work.
That's on top of it being less people.
May I have your attention, please?
If you're listening on the show, hear what G-ACCON can do for you.
It's accounting integrators. We're integrating Google Sheets with different accounting software. Xerox, QuickBooks, Sage, FreshBooks. We do two-way synchronization to download raw data, reports, consolidation reports, and do bulk upload.
Corey, you want to say a couple words? You're like the student sitting in the front row.
Where do you see people using the product more? Is it more on the reporting or the data side?
Why you really using G-ACCON? To automate the process. So basically, we're helping accountants, business owners to have these numbers as accurately as possible and as fast as possible. We're managing a lot of data in both directions.
This excites me. As someone that's coming from building custom integrations, this is basically a tap into the API, pulling invoice data, location data, payment data, line items, customers, right? This becomes very powerful. It's more than just reporting.
You're limited by your imagination.
Yes, that's true.
One of the key features is not only that two-way sync for a lot of people, but I think it's just extracting raw data. It's great to have report, and those are super valuable, but where my head went to is building some of the working papers for the balance sheet. If you can start to pull some transaction level detail or account level detail, that can automate a lot of the accounting process that many people just don't like doing.
This is a huge, huge unlock. I've been wanting to do things like this forever with access to all the data pieces. You can pull data from one client and another and compare them all.
And then you can go even further, right? It will be your dashboards. This will be your BI solutions, your presentation layers. And that will give you huge visibility, right, to the client. They don't like to dig in numbers. They want to see it colorful on the graph, your next presentation layer. People use us a lot this way, too.
You could also export that data into your QuickBooks or Xero.
That can be done, too. Yep.
Ooh. Secure, automated, easy, two-way sync. Head explosions going on. That's awesome. What can our listeners do? What can they do to sign up? This is the call to action here.
They can access us through our website or go to Google Workspace Marketplace, type G-ACCON, and you will have all our products there. Install it and go ahead.
G-ACCON, what's the website URL? We can put that in the notes.
Accon, accon.services.
Okay.
You guys have a 14-day free trial for anyone that wants to test it out, experiment. That's what I'll be doing next.
It's absolutely free. They don't have to put any credit cards. We just want them to be comfortable and see if it tool really works for them. Go and try us out.
May I have your attention, please?
Welcome to Accounting High. It's freshman year at a brand new school. Here, we have no rules in place as we're on a mission to set our own traditions. So hang tight and learn with us as we grow. At Accounting High, you can expect to gain knowledge in a completely different way than what you may be used to, with some fun and oftentimes colorful conversations. Whether you loved high school or you hated it, here's your chance to be a part of an unforgettable experience redone. While you're here, don't forget to follow us on Spotify or subscribe on Apple Podcasts or wherever you may be listening to us right now so you don't miss out on any new episodes. And feel free to leave us a 5-star review letting us know how the school year is treating you. In addition, share this episode on social media, tagging us at Accounting High. So sit back, relax, and open your mind because class is in session.
I repeat, may I have your attention, please?
This is another public service announcement brought to you in part
by Accounting High.
The views and events expressed here are
of the next generation of accounting and tech professionals leading this space.
The events and suggestions are not to be taken lightly. Children should not partake in the listening
of this podcast.
Anything else?
Yeah. So without further ado, introducing the star of our show,
Jason Ackerman and Scott Scarano.
we're gonna have a problem here.
Class is in session.
Wow. Did it bring tears to your
Nice.
eyes, John? Or is it just me?
Nostalgia.
For a couple of reasons, I guess. Could be for the M&M for some people, or high school for others. My co-host today is Jason Ackerman. And Jason, would you like to introduce our guest?
John Nevel. Did I say your last name right?
You did.
Nailed it.
Good pronunciation.
From Nashville.
Always the first hurdle.
In Nashville. Yep.
I love it.
John Nevel from Nashville.
Where are you from originally? Because you went to University of Miami.
Pennsylvania originally.
So how'd you get down to University of Miami?
You know that propaganda that they send in the mail?
Hot women, cocaine?
And you get those pictures. It's hard to say no.
Sex and money.
So
You take a little trip in April to Miami, and then the next week you go to Boston University, and you're like, I think Miami will be it. It's not rocket science to the answer.
And this is not Miami, Ohio, too.
No.
This is the Miami.
The U, yeah.
yeah, my best friend went to University of Miami. We're from Charlotte, and
Nice.
he became an Orthodox Jew down there. He did like the opposite of what you should do at University of Miami. So,
But that is the other Mecca there.
so how'd you then make it to Nashville?
So after school, graduated in 2009. I think they say it's maybe one of the worst years to graduate college in the last 100 years.
I'm 09 too, so I feel you.
So, first world problems. So went it took a nonprofit internship in DC at what is the American Council on Renewable Energy. Had a passion for the renewable energy space. That then led to my first job at accounting firm, which was at the time Resnick Group. Did that for a couple of years, and then I realized corporate world was not for me, and moved to Nashville after being talked into it with my friends, one of which is my business partner. And we actually all grew up together in Pennsylvania and then moved here.
So your friend was just like, let's move to Nashville, and you're like, okay.
Well, it's a little bit more detailed than that. So my business partner, Dan McCarthy, we grew up together in Pennsylvania. His younger brother, Colin, played football. So he was drafted by the Titans, and that's really what put Nashville on the map for us in 2011. And then we came to visit, and it was a really good town for entrepreneurship. At the time, it was much cheaper than DC. And Dan was moving from Florida, so it was a good middle of the road to link up, and we just hung a digital shingle up there. Anybody, whatever they want to pay us to do, we would do it. Throw a little
digital shingle.
Yep.
I like it.
When you decided you're gonna found your own accounting company, like why? I mean, you kind of said you didn't want to work for a big firm, but like going on your own, some big steps, and then.
So what we first did when we got to Nashville, the first thing I did was reach out to the energy space because I was still very much into that. And it was a very much smaller industry in Tennessee. Renewable energy is very state-by-state based. It's kind of like cannabis is. It's based on state laws and regulations and incentives. So Tennessee was pretty early, but we got in with a solar installer that was pretty large at the time, and we were doing financial analysis, trying to bring investment into the state from some of the contacts that I had working with when I was the low man on the totem pole. We were getting pretty close, but then it got really just the politics of the state just kind of made it impossible. And we weren't ready to really, call it quits on doing our own thing. And at the time we got a couple other, small startup companies doing $250 a month type bookkeeping. That was early on. So when we put away the energy stuff and then jumped full-fledged into the the finance and accounting, what we kind of saw was that these small startups really needed a lot of help, and we really wanted to bridge the gap of the finance and accounting. Both my business partner and I come from audit backgrounds, him in internal audit, me external, and we really like the aspect of like getting to know a business and audit. I still think audit is a really great place for people to learn. You get unprecedented access to a business and their people to gain knowledge, but the biggest problem with audit is everybody knows like you're 6 months behind. You're not really helping them do anything. There's not a lot of value provided. So what we wanted to focus on what was the future, so bridging the gap between the historical and the future. So since day one, we've been pretty focused on the financial aspect with these businesses and building an F&A practice with that.
How many times have I said bridging the gap between the past and the present Ackerman? I talk about that all the time. He gets tired of me saying that.
It's like we're in London all the time with you.
That's on our BTO, man. Bridging the gap.
Bridging the gap.
I love it. So
is it bridging the gap, though, with 2 A's?
No, we're not as punny as you are.
We need to trademark that, bridging the gap. Put that on your list, guys.
I had another good one earlier. I don't know how it came up, but it was like the iPhone, the I in it is an upside down exclamation mark. It's kind of like the Spanish upside down question marks. It was in context, though. This is out of context, but that was the joke there today. Sometimes I surprise myself with these funny ones.
So when you started your own firm, and you came from a big firm, was there stuff like you knew you wanted to do, you didn't want to do?
So when we got started, like I said before, we were starting with pretty small companies. I think I listened to some of your podcasts before, Scott, and I've heard you guys talk about like you work with your clients where you are. I would say that I would probably edit that a little bit, and you work with the clients where you want to go next. So when we were the $0 in revenue, we were trying to work with the people that were $200,000 in revenue. When we got the $200,000, we were working with those at $1 million. Or $1 million, we were working with those, 2+, and now we're about a $2 million firm. Our typical clients around $5 million, in revenues. They can go up, obviously they go upwards, but that's how it kind of evolved for us.
Well, that's how you learn, and that's how you push yourself too. It's like when you're working out, you always want to be a couple levels up, or anything you're doing, you want to challenge yourself and push yourself. And if you surround yourself with people, you're the average of that. The people that you're probably the average of all your clients.
Yeah.
If you took that as a whole.
So what?
Yeah,
of
absolutely.
a $5 million client, what's the typical services you're providing for them?
So it's typically the controller service. So what we call a controller service is AR, AP, month-end close, financial reporting, and then we do KPI, dashboarding, and then we'll also add in cash forecasting, monthly cash forecasting. And that's what we consider controller service. So everything from there on down, we're gonna control. For most of our verticals today are technology, SaaS, and healthcare space largely. We also have, service-based companies that can be wide-ranging in industries, but those are the two niches that we have really dialed in on in the last couple of years. And with a lot, especially in the SaaS business, they typically have a VP of finance or CFO internally, and then we operate as that finance and accounting department, handling all those forecasting KPIs and all the accounting structure from there.
Do you guys do any specialty tax? Like when you're
we don't
software
do any
tax,
tax.
do you do any R&D? Oh, you don't even do tax?
We don't do tax or audit. We are strictly outsourced F&A.
Wow.
Yeah.
That's unique.
Yeah.
And how many employees do you have?
We've got about 20. I think today we hired our 22nd.
It's exciting.
Yeah.
So 22nd, including you and John?
Including me
you
and Dan. Yeah,
Dan,
including me and Dan. I hired our 22nd today. Yeah.
So hard numbers. We can go straight into
let's go
Hard
straight
numbers,
to them.
baby.
So, so 2020. So I was looking back at this. So we grew up. Everything we've done has been organic, bootstrapped. Everything from day one. Around 2015 to 2019, we were growing on average 40% a year, and then 2020 was kind of turning point for us. That's when everything we were doing no niches whatsoever. We just kind of take on any client. But we would do a lot. We would, as we were saying, we were doing F&A from the day one, we were really, really cheap for people for a long time. It took us a while to really, get to the level where we really understood our value. So I think in 2020, or even before the pandemic, is when we really realized that the model wasn't working. We had an employee that was really, really good, and she left because she didn't like accounting, and we also inadvertently burned her out. And that's when we kind of saw that happening. And then when COVID happened, everybody started getting burnt out. So that's where we kind of really started diving into, we needed to purge out a lot of these clients that didn't work for us anymore. We started really focusing on those niches. So 2020 was our worst year ever. We grew only 7%. And then from there on, we've been 30, 35 the last 2 years, and we're on track for 35. We're about a little over, we're about 2.1 over the trailing 12 months. We'll probably end the year around 2.2.
So 2.2, 22. Those are the two of the metrics: employee count, top line, bottom line. What do you care to share?
Our bottom line is not the best at the moment. The way we're much more focused right now on building the right firm. So in the way we've kind of structured things over the years is, a lot of firms in this space have kind of run away from the FP&A, I would say. As what we saw in the beginning, a lot of people started trying to do it and then started kind of more running away. There's a lot of good people that are doing it well. I'm not saying that
we're trying to run away from it.
But we see a lot of people running away.
Well, people are chasing us too. Even if you've got apps and vendors that are chasing us with, you have to do advisory, you got to do FP&A, you got to do this, and that's why a lot of us are running away, because we want to look at the tax. We want to be comfortable with the gap of last year. Yeah, we want to look at last year. Yeah,
what we really found is that it's all about the pricing. You got to find you got to be willing to turn everybody away, and I think that's where a lot of people probably get hung up, is that what is somebody willing to pay for it? I would say when we look at it, 2016, 2017, our average client fee per month was probably a little less under $2,000. Today, a new client starts with us $6,000 to $8,000. So it's a way different business model. We probably have the same amount of clients. We're about 37 clients at the moment. And we were 37 clients 3 or 4 years ago. So it's just a matter of really driving up that average monthly fee to bring that up. So we're right now in the process of really hiring ahead and investing in our team, because we have a model that essentially we want this one full team where we have our controller, assistant controllers, senior accountants, our bookkeepers, and then plus we have an implementation team that we really invested a lot in as well. Over the years, we've tried to do implementation in a lot of different ways, but that's really good implementation is the crux of a sustainable business in the long term.
Oh, hell yeah. Yeah. And that's onboarding.
So you've got 22 people and 37 clients. So
you're doing a lot for them.
So that's
we do a lot for them.
So what is a typical person, how many clients are they working on?
Typical team, though.
So a typical senior accountant at the level of fees we're at now are going to be somewhere between typically 4 or 5 clients. And then the assistant controller is going to have to double that. Yeah. And then our controller's handling 3 of those on top.
So it's basically they've got quarter-time jobs.
Handle 3 clients at a time.
Yeah. The senior accountant. Senior accountant is where we wait. That's the meatiest part of the business. That's your day-to-day transactional
doing the AR,
go-to
AP,
point of contact.
Doing the reconciliation coding.
Yeah. Exactly. That's where you learn.
So you think that person can handle 3 clients at a time?
No, they're handling about 4 to 5. Yeah, and some of them are handling more. We focus less on the number of clients and more on the top line revenue that they're bringing in.
Revenue that's being managed.
Yeah, revenue that's being managed, but it basically factors out to around 4 to 5 right now.
So go back to the margins question that you haven't answered yet, and that's okay.
Is it okay?
Projecting this out, well,
So
you're kind of hiring the teams so you have the capacity before, and that's going to definitely eat into margins when you do that. But let's say it's a team that's fully capacity. It's everything's churning, running along. What's your do you measure margins for those teams?
50% gross margin for our recurring team. Yeah, we have an investment right now on our implementation team, but that's the way we've played it, because we want to build out that team and then scale.
The gross margin means their salaries,
direct labor. Yeah, direct labor.
So
your client team into that revenue.
So I guess, kind of backing into this, how do you? So your team consists of a senior accountant, assistant controller, and a controller.
Yeah. So if you looked at our team, we'd have essentially two different divisions. We got implementation. We got our what we'll call our recurring growth services.
Yeah.
Internally. So in there, you've got from the bottom up, you've got a senior accountant who's that point of contact for that. What we said, that about 5 clients, let's say, they're going to have a bookkeeper on each one of their clients. It might not be the same one, but they're going to have a bookkeeper on each client. And then there's going to be 2 senior accountants to every assistant controller. And then we have a controller on top of that we're filling in the process. And then that's one team. That's our recurring
and how
team.
much,
And then
how much money should that one team, do you think, how much should they be able to generate?
That's where we're going to look for that team to do about $2 million. So once it's all said and done.
Okay.
And then our implementation team is going to be, we've got a finance manager. We've got a SaaS, essentially revenue recognition, a specialist, and then we have an implementation senior accountant plus an implementation director for that, since we're functioning so much of that up front.
And implementation means, like, the client comes to you and you've got to set up all their accounting and their bookkeeping and their...
Yeah, we run I mean, you guys have talked with all the smartest people in the industry. Everybody's got pretty much the same process. It's discovery, it's implementation, it's recurring. How you do recurring is pretty much how it changes. Some people will throw a fractional team at it. Some folks will have one person that just handles their book, and they might do it hourly, they might do it value priced. But pretty much every solid company, I would say, does a discovery, implementation, recurring. And our discovery starts in the business development process, and then that's how we kick off any implementation. And our implementation starts with the bottom up. We always go bottom up. That's a big theme in our organization, is that you got to get everything cleaned up first. You can't do, to every client that you ever work with, that you guys probably heard, is like they come to you, and this has not changed in 10 years, that they come to you and say, I need a forecast, or I need a KPI dashboard. And so then you go in their books, and it's a freaking nightmare, and you have to start there. So we clean up the books, and then you do KPI dashboards, and then forecasting is the last thing. That's how it works, because you can't have forecasts if you don't have data that makes sense, and you need KPI drivers for a reference point on actually how to create a forecast. And that's the big key when you talk about bridging the gap. It's also about bridging the knowledge gap of an entrepreneur, because the entrepreneur is going to come in with their pie in the sky projection that just doesn't make any sense, and then when you look back at their financials, so you got to help them tell the story of where they are historically and how they're going to actually make that grandiose plan that they have a reality.
So how do you,
and all of that's,
how do you price the clients?
So I would say 90% of our clients are fixed fee. In our implementation process, we do hourly implementations. And the reason that we do that is we tried doing fixed fee implementations before, and you end up losing your shirt. And the reason for that
is... If you don't lose your shirt, you price it out too. And
yeah.
Sometimes you balloon it too much that they won't even accept it.
Yeah. So we keep the implementation on an hourly basis, and essentially the biggest reason for that, we have a rate schedule, anywhere from $100 up to $400
Depending
an
on
hour.
who's doing the work.
So, yeah, depending on who's doing the work. So when you look at the hourly fees, is everybody, kind of has that same process of what we're looking for, right? But every client has a different state of their books on the cleanup. So somebody could have really clean books because they came to us and their accountant that was doing a good job got another job, and just isn't going to be there anymore, and they need somebody else to step in. Or they came to us and, it's an absolute disaster. They've been running their business out of their bank account and they haven't looked at anything. So you got to clean up everything from, the prior year and the current year. So all of that takes a lot of different effort that you got to do up front first and then implement the systems. I would say if you look back, and a lot of people probably tell you this too, 5, 6, 7 years, when people were coming to us 5 years ago, pretty much everybody was still on like QuickBooks Desktop. Nobody had heard of Bill.com. Nobody had heard of Gusto, Expensify. Today, I would say more than 50% of our clients are already on QuickBooks Online, already using Bill.com. They're probably on Gusto. They've heard of Expensify. So the core tech stack is not that much of an issue anymore. Like, we used to implement the core tech stack a lot, but now it's more about just cleaning it up, making the process a little bit better, maybe adding one or two little of the core features before we run into adding revenue recognition software and structure. And then we use GRAV a lot for our forecasting and KPIs.
So, and then on the...
I want to play my rap now that you mentioned
we'll
giraffe.
put in the
Giraffe,
giraffe,
Be the cue, yeah.
where they pay us money to talk about them. So and then once they start,
They kind of pay.
then
for
once
the
they start
rap.
recurring, how do you price the recurrings on a fixed fee?
Those are on fixed fee. Yeah. That's why I said 90%
But how do you
are
do
on
it?
fixed fee.
How do you come up with the price?
So it's a value price model. So it's basically we have come up with, here's what we want to hit on an effective rate, and here's our, based on what that client looks like versus somebody else and what we might be adding in there. If we're going to start with a client these days on our base level, let's say it's $5,500 a month, and then we'll tier it up. If we add in cash forecasting, we'll throw it at $7,000, and if we add in a CFO meeting advisory session, might add in some more time. And it's also based on the volume too. Client at doing $2 million in revenue versus a client doing $10 million or $20 million in revenue are way different. So, and the volume of transactions as well. That's, a B2B SaaS client versus that's got 300 customers versus a B2B SaaS client that's got 10.
Yeah.
It's way different model. So
And how often do
it's all dependent.
it's
all dependent on that.
look at your fees and change them?
So we have escalators built in there now that we're taking advantage of. We pretty much go through our effective rate analysis to see where people need to be. We actually just went through several clients recently on increasing their fees that hadn't been increased for a long time, given the inflation. So typically we're looking at it on a pretty regular basis now. Like, we have what we're setting as essentially an effective rate target at number of hours, the fee over the number of hours. If we have trying to hit that effective rate target, then once it drops below that, we're going to take a look at it and see, are we being profitable on this? Is it sustainable? Is it going up or down? And is it going to trend in the right direction? If not, then we might need to take a look at increasing the fee. But what we also have is, in our engagement letters, we have it specifically called out that if anything's out of scope, we charge them hourly for those projects. So you can have a fixed fee that lasts for a little while, but then the projects that come in and out that they throw those out of scope stuff, we'll just bill it back to them.
Do you have like a yearly inflation? I'm going to go up 6% no matter what in the engagement letters?
We had been at 3 on the engagement letter. We probably need to revisit if that's the right percentage anymore.
Because it's nice, because you don't have to keep getting engagement letters. Like, tax clients, you have to get them to sign something every year. So it's nice, you can just set them up and then basically just once a year be like, boop, your fee's up.
Yeah, that's those are the best ones, and we've been we didn't do it all that well in the beginning, but now with everybody, we pretty much have that.
So you've been doing this for like 10 years, something like that now?
Almost, yeah. This specifically about 9 years.
So what's like,
it's been a long.
if you could go back from 9 years ago, what would you do different right off the bat?
Invest in it, like capital, get a loan, put it in the business. We started the business. I was 24 years old. My business partner was 25. When we started the business, we were pretty young. We were green, not exactly sure what we were doing, but we learned, and we quick learned over it. I would say that definitely putting some money in the business to bring in higher level help earlier. We built this business from the bottom up, meaning we have one employee who's been with us for 7 years. He started with us as a senior accountant. He's now our implementation director. So it's good for us where we have that consistency and people growing inside of our organization, but that creates a lot of, it's slower that when you don't have extra resources to help you out earlier on.
So you would have hired higher level people earlier.
Yeah, we would have hired higher level people earlier on. And we also would have set our fees much higher earlier on as well. And also would have niched down much earlier.
Yeah.
All of these woulda, coulda, shouldas, right? But you don't even know.
Well, it's kind of a recurring, like everyone just kind of, when they first start, they're so scared. So they just like.
But you want to win business, though, and you want to. Yeah, you're afraid of people saying no for fear that everybody's going to say no. Like there's so much going on in the beginning that
you just had some faith in yourself. You got to have self-confidence, but it's hard when you're first starting.
Yeah, it took a while. I would say around like the last few years have really kind of changed our business from like going from a founder to like an actual CEO and a leader. Like it's way different when you have a team of 5 people or less. You're still very much a buddy organization, and you're trying to make something happen. But when you got a team of 15, 20 people, it's a way different dynamic.
So what do you spend most of your time on?
So most of my time is spent on internal coaching with our team. It's going to be spent on.
So what are you
coaching?
What
business
are you coaching
development calls. Our team. Most of the coaching that I do with our team is largely soft skills. I would say I will do hard skill trainings, but I'll travel. Last year I did a lot more of it before I had to dive back into some of the inner workings of the business because of like where we're putting our efforts for our resources. So, but when we do trainings, I'll build hard course trainings like video tutorial trainings, and we'll do video sessions with our team. But a lot of it's the soft skill coaching. Make sure people are getting what they need from a management standpoint, and then also soft skills on how to deal with clients. I mean, that's the one thing I think. I listen to a lot of your podcasts, and the one theme that I think that never comes up in your podcast is that everybody's very positive about their clients, but everybody knows that clients are the worst part of the business. It's like
some people love their clients.
They
others,
keep you.
Yeah.
No, it's not about whether you love the clients. It's about how do you deal with your client stresses.
Yeah.
Because the number one thing that I think anybody does. This is not accounting specific at all. It's in any business, any individual, is that everybody's trying to be a perfectionist. Everybody wants to please their clients, and everybody's doing a really good job of it. But what burns people out the most is not the work. It's the stress coming at them from other people, the demands, the expectations of what's coming to them. And how do you manage those expectations? Because people, in your stress response, you might freeze up, or you're going to want to run away from it. But all you want to do is, do a good job and afraid of doing anything else. So typically people are afraid to push back, ask for a reasonable demand, understand why that person is stressed. So a lot of things, like when you talk about like soft skills of like managing your clients, is the number one thing we do internally. We have a professional development culture coach internally that we do with our team, They do management training. She does management training, but she also does this. It's called ELI assessment. So you guys have probably.
What is it? What's the acronym?
ELI, ELI, Energy Leadership Index.
Eli, the book. Book
yeah,
of
Book of Eli. The Book of Eli. So you guys have done. Everybody's done, or not everybody. A lot of people have done DISC or Predictive Index or Culture Index or Myers-Briggs, your personality profile. What the ELI does is it's your attitudinal assessment. So it's essentially there's 7 layers of stress that you encounter, and how do you encounter those when you are in a stressful environment versus a more regular environment. And everybody has different profile for that. But the number one thing that everybody they have a different profile how they react to their triggers when they're in an environment that they're not stressed in. But then their energy changes when they're in a stressed environment. And that stressed environment can change for every. What the triggers might be different for every person. But across the board, everybody has their first stress trigger is to be a victim. And then the second stress trigger is to blame somebody else. So I think the most important thing.
That's where you get victim blaming.
Exactly. So then what we work with our team on is that we went through it for our team themselves to more of a self-assessment tool. But what actually, for me, it actually helped to actually coach them on like, well, this is how your client is responding. If you got a VP of finance who's upset that you missed something or something didn't get done on time, it's like thinking about their stressor. What are they stressed about? They got a board meeting. Their board's down their neck. They're afraid that they're not going to be able to answer a question to the board. And then they're going to victimize themselves and then blame right back at you. And when you're an outsourced F&A department, you're not inside the organization, so you're typically the easiest person to point a finger to. So a lot of it, you have to manage personalities, you have to manage, the client expectation. When you do that, you make for a much better relationship and much more long-term relationship. I think that's where we've probably been. Helps our success the most is actually managing those client relationships, because you can't when we're doing as much as we're doing for a client, when we're as intertwined as we are and how much they rely on us, the importance of the information, you're bound to make mistakes, you're bound to make errors. You can't be perfect every day, and you just gotta own it up and fix it and work with clients to get them what they need.
So I love that you brought that up, because this just came up Friday with my team when we've been forever trying to figure out what's our industry vertical, and they consistently always say they don't give a about that. They care more about the types of clients that we're taking on, their personality types, and so there's, we don't go that deep into the real psychology around it, but we just know in general there's about 20% of people that just suck regardless of what they're doing, who they are. They're just terrible. Maybe 10% of people that are just not, those are the ones we definitely, it's easier to weed those out. But then it's the passive aggressive ones, the ones that really get under your skin and work their way in. It's harder to find those. And then you got the narcissist, or the people that are that are politically savvy, and they end up in the door, and then they're basically commanding all of the attention of that account manager, or and usually it is a blend of that passive aggressive. So, but it's hard to figure that stuff out on the front end. Do you find that you're better at taking on the right clients, or if somebody's willing to pay and they're the right industry and everything checks the box, are you even looking at their personality type too?
Yeah, in our business development process, we do have our process to determine is the person a good fit. When we're looking, we have our business development director. He does a lot of that screening early on to kind of see, when you ask questions about their business, you're gonna find out how much, how prickly they're gonna be. That's the biggest thing is in our discovery process. I don't ask questions. I don't spend the time asking questions about their accounting process. I spend time asking, what are your marketing activities? Who's on your sales team? What systems are you using in sales? How do you implement your clients? And if somebody responds to me in a way you're an accountant and you don't need to know that stuff, End of the conversation. Because we do that because we need to understand how their business works and what they're using. If we're going to provide them KPI information, forecasting information, if you think anybody who thinks an accountant or finance team can sit in a silo in the back and just clean up everybody after it's all done, they're not a client. They're not a client for you. You got to have somebody that understands that this is all a cohesive environment. Everything connects to one another. Processes. An accounting system that doesn't work is not, the process didn't break in accounting. The process broke somewhere else. Rolls downhill. So, and we're always the ones to pick it up. So, so it's that. So that's how you find out if somebody is a good person or not.
I like that
in those questions. So
yeah, there's always this is the soft skills of knowing what to ask, asking the right questions, and then gauging their answer. Like we do it a little bit differently, but we ask all those fluffy questions on a type form. Mm-hmm. And if they don't have the time, or they don't want to give it the time of day, this is not relevant to what I'm asking you to do. Like we ask them what's something that they're most proud of, like soft questions like that, and the ones that really engage on those, we can tell they're going to be better on the back end.
I think that's great. Do it on type form. I would say do it on the call.
Well, we do.
Yeah.
It's just that's what gets them on the call.
Yeah.
If they can't even do it on the type form, they don't even make it to the call sometimes.
Have you thought about making them record a rap?
Well, that's my job. Soon there's going to be a type form.
Don't take his job away.
Don't take my job.
I want to go back to the soft skills because you kind of talked about the client part, but I'm very interested on teaching your team the soft skills and so give us some what do you think your team struggles with the most? I know you talked about dealing with clients, but how do you kind of help? What's the biggest thing you see them doing that you need to help them with?
Well, I think the number one thing that most people in the world that we all struggle with is being okay with failure. Psychological safety is a big hot word that Google made popular, and it's right. So, and that's our big goal internally for our culture is psychological safety, and what makes a psychological.
I've never heard it before, but I love it.
Yeah, what makes a psychological safe organization is when you are free to fall on your face without judgment. So being okay with failure is the number one thing that people have to be okay with. And that's really hard for anybody coming out of school if they haven't been encouraged to do that. And it's really hard for, we're in the accounting profession. Like most accountants are very detail oriented people. Like a lot of them might be introverts. That's a hard thing to grasp. I'm in a situation where if you looked at all my personality profiles, everybody why is he an accountant? It'd be the left. So I always kind of look at I definitely have my areas where I'm scared of failure, but we have when it comes to client, I'm not afraid to ask questions, the dumb questions, any of the questions. We sit there and we talk about how do you advise your clients? That's one of the big things too is we've worked in almost every industry, and the reason that you can do that, and not that I'm saying that I would recommend everybody work in every industry, but the way you can advise anybody is you just ask questions. You don't need to tell them anything. So you just ask questions that give you the answers, and those are the type of skills that make you a good advisor. And that's how you learn too. So if you fail at something and you screw it up, you have a chance to make up for it. Nothing. We're not doing surgery, right? Nobody's life is on our hands. But
I think in general, accountants are the types. A lot of professionals. We're the type of people that we want to have the answer. We want to feel like that's our value is we can give the right answer, and if we don't, it's not that not everything's the life isn't on the line. But for us, sometimes our psyche is on the line. Sometimes our our self-worth is on the line. If we don't know the answer, then they're going to think we don't know any other answer too. It's just a lot of irrational fears that we have of not knowing the answer. And it's you have to coach people to get out of that mindset. It's very hard for them because they want to know, like they want to feel like live on the call, I know something, you know, and when you ask me something, I know, and sometimes we fib, we lie when because we want to give an answer and we give the wrong answer instead of I gotta look that up.
Yeah.
You know, we just
Yeah.
So
I mean, you're 100% right. That is kind of like, that's the natural reaction. But once you start to get comfortable with it, when you start to get comfortable asking the questions, like, for example, like we do a lot of KPI reporting with our financial statements in Giraffe when we present to clients. What those KPI...
Giraffe.
Sure.
That was the key word. If you said it one more time, I was going to play the rap. So at the 45-minute mark, I'm playing it. Oh, you keep going. Yeah. I got another minute.
So when we present those, you know, one of the big things is that a lot of times people might think it's like, okay, we're reporting KPIs so that we can tell the business owner all about their business. But one of the things is that those KPIs are it's essentially just a confirmation of what's going on in the business for them. They know what's going on in their business. You don't need to tell them. They're working in it every single day. Those financial statements are lagging indicators. Like, they already know what happened. They're just trying to get confirmation for themselves that all these things that they're thinking about, is it right? And was I thinking about this correctly? How far off was I? Maybe there is something in here that's wrong that I don't notice. And that's why when you go through those KPIs, you go through those financials, it's asking them questions to say, oh, your revenue, a simple one, your revenue ticked up this month and you're a recurring business. What happened? Did you get a new client? You know, they can answer those questions. Or if the revenue dropped, like what happened? They're going to know. They know the answers. You don't need to tell them all the time, you know.
So perfect segue. I talk about look backs in here. I talk about last year's data. Let's all right, we're gonna have a lot of fun on this one. I do my part, you do the hook. Ready?
J to the Izzy, R to the AV.
Welcome, ladies and gentlemen, to the ninth wonder of the financial world. The app of the century, it's priceless. It's Giraffe! Commercial break. This is the exclusive Giraffe ad advisory. J-I-R-A-V. Let's go. J to the Izzy, R to the AV. Scalable, affordable, dabble in advisory. Eliminate, frustrate, reprint spreadsheets for them. Coordinated date, paper print statements of income.
I can't believe you're playing this live.
Print track the outcome. Immaculate creation. Giraffe baby born with outcome. J to the
I
Izzy,
hope you have a music
R to the
video of in one of their giraffe costumes.
CAS advisory. Can't give accountant alone. The game
we'll get
needs
there.
me. Planners want strategic tech. It ain't freezy. Clients want a 360-degree flaunting money. Then why is giving advice still daunting, homie? J to the Izzy, R to the AV. Stress-free advisory technology. It works efficiently, but that's
John, is this wasting your time, or is this like what you signed up for?
No, it's fun.
Okay.
R to the AV.
Scalable, affordable, dabble in advisory.
J to the Izzy, R to the
That's my
AV.
daughter.
Did you get any cease and desist letters yet?
Not yet. I hope to. I hope
R to
to.
the AV.
That's the goal.
That's when you know you made it. That's when
Yeah.
J to the Izzy, R to the
Kanye
AV.
or
That's
Jason,
the platform.
whichever.
I perform to inform. I do this for my culture to let them know what's accessible, reliable, and affordable. Show them how to move, yo. And
There's a lot of bars in this.
structure. Industry is shady, so Giraffe be taking
I swear to
over.
God, this is what I deal with every day.
I'm building the oasis, charging for
I should
what
get
they
paid
did
for
on a
this.
cash basis. Pull
Yeah.
data from clients, generate visuals in minutes, but hold up, I'm not done. Just go to giraffe.com/sun.
J to the Izzy, R to the AV.
There's one more verse. There's another verse after this one. And that's the best one, too. The best is last. I don't know how I'm going to deliver this. I don't think I can play the whole thing. And I'm doing it on an episode now, which is kind of funny. I knew Ackerman would get paid. Let's get to the last
There's
one.
nothing I love more than
Last
wasting
song.
my time.
I perform to inform.
Yeah.
Travis financial stories told through CAS. Don't be acting like I just sold you tax. Like I trained you to sell CAS. No Giraffe did that. Training's free, so hopefully you didn't pay for that. I was raised by a
man.
pageant, now coaching facts.
blockers of HR, selling last.
This is like my
year's
worst
backs.
nightmare.
Sign twillers on the corner, focused on tax.
You know those soft skills?
Dude, Scott, did you miss the quote, less is more? Did you?
I know,
He
I definitely
missed
missed it. I'll
he
stop
missed
it
the
there. I didn't even get
he
to
missed
the
the
end
7 years
before
of
you guys
soft skills
booed me off
training
stage.
where they would teach him how to like interact with people. He missed those.
You guys booed me off stage. I took it off. I stopped it. Well,
Scott
that
learned how to
was
do
my,
a drop, and this is bad.
Yeah.
I learned honestly, what I should have done was just use that and then cue it in the post.
Yeah, so you should. That's exactly what
But
you
I'm
should have
trying to
done.
save my post production time. I'm trying to save the time there so I can do it all live, and then there'll be less editing. I learned how to do this. This is a new skill that I'm threatening Ackerman with. So I could just mute him and then do whatever. But so yeah, that was
Anyway.
just the you know how the Pee Wee Herman show, where if you said a word 3 times, then all of a sudden something happened. Did you guys ever see that, or don't remember that?
No.
Yeah. So during the show, I think Sesame Street does that too, where if you say the letter of the day or the number of the day, then all of a sudden everybody goes crazy, like the Muppet Show. Yeah. So that's what you did. You hit the giraffe button again, and then it played. It triggered the rap. Continue. I apologize for the interruption.
It's a
That's
giraffe.
just my MO.
Wow. No,
Where
what?
were we?
Okay, what I love that you do, John, that I don't think most partners do, is you spend a lot of time with your team, training them, and you're exactly right. Like, you don't learn the soft skills. Like, there's not a class called soft skills in college.
No.
And you like, I tell people all the time too.
There's a class for soft skills at Accounting High, though. That's going to be one of our. John, you want to be a faculty member at Accounting High?
Let's
You can
do
teach
it.
soft skills to accountants. I'm serious though. I'm actually not kidding. That
Absolutely.
would be a dope class.
Well, and I think you lead by example too, because you also you've the key is like you allowing them to fail and like having that psychological freedom or whatever you called it.
Yeah.
I think that's
psychological safety.
I think that's so important. That's like, and no one's really said it the way you said it. So
Yeah. Well, culture, like, everybody's probably heard at some point in time culture eats strategy for breakfast. But in today's day and age, like, if culture is not part of your strategy, like, you're going to be eaten alive. Like, you've got the way wages have come, there's not enough people. I've seen too many businesses in every single industry complain that it's just that nobody wants to work, or that this generation's different, or so on and so on. I gotta wait for it to go back to normal. There is no more normal. Like, this is the way it is. Like
the
and
new
no
normal.
generation's
Baby
different.
boomer-
Every generation's complaining about every other generation.
There are 10 million less people in the workforce when baby boomers retire and Gen Z comes in. It's an
it's an
that's a
entirely
numbers
different
thing.
mindset around work. Like,
Yeah, that's
this
on
was
top of
the
it being
major
less people.
Yeah.
Yeah.
The last episode I recorded, which will come out one before this for listeners, that's all we talked about was that generational shift in mindset around work and life.
Yeah,
Like, it was always two totally
I don't know
different
if I agree
worlds.
about. I don't think there's been that much difference. I think back then you had like the corporation that would pay for everything, and corporations no longer do that, so they've lost their trust. We've lost the trust in the corporation. But I think if you can create an environment.
Well, this is the thing. You need a good job so you can have good health benefits, so you can have a good pension, which was a thing. It's not a thing anymore. Like, corporations would
Yeah, but
pay
that's
for
what I
your
was saying.
life after work.
But they
too.
would they would take you. You worked for the corporation. They would take care of you. Well, why are we not doing that anymore? Why, as a firm, are we not?
Because we don't want to
that?
be defined by the corporation.
No, it's
we don't.
no,
we
it's
want to feel
because
like we're more in
corporations
control.
don't learn that they don't have to spend the money to do it. It's the corporation's fault. It's not.
Some people don't want to be tied to one thing.
It's not the worker's fault. It's the corporation's fault.
They own you, though.
Yeah.
If they're paying for everything, they own you.
I'm not-
if you want to wear,
I'm not saying
if
that.
you want to untuck your
But
shirt,
that's a really good comment, though. Like, that's how it used to be. Is that it used to be that employees work for an employer.
Yeah.
And yeah, of course, employees still work for an employer, but that's really not true anymore. Like, if you want to be a good company that people want to work for, the quicker you come to realize that you work for the employees. Like, every day you got to provide a better place for them to want to come to, because they walk out every night. There are no assets in a service business. They walk out every night and they can choose to just not show up the next day. So you got to provide an environment that they want to come to and that they want to be a part of. And those that aren't going to do that, and they're going to complain about, well, it's just not the way it used to be, well, they're not going to be around. So it says it's easier. So the quicker people get around the concept that it's a new world order, you got to provide a real benefit and a real culture, and especially in a remote environment where you have to be super intentional about it. You can't be the charismatic leader just walking around the office. Everybody.
That's the definition of the generational shift. We're shifting our entire mindset around work and how to be an employer.
Yeah.
And that wasn't always the case. It used to be you throw money at all of it and everything else works itself out. Well, you can't throw money at it anymore.
Yeah. Well, and you also have a dichotomy right now of, you got people, everybody wants to work remotely, right? Nobody wants to give up their freedom. But at the same time, everybody wants connection. That's a human element. And when you're working remotely, you're just naturally not getting that connection. So you have to create, it's like extra hard, but you have to create environment where people are free to connect with one another virtually. And that that they're getting that there, or that they're getting it elsewhere outside in their own lives, because you don't get that connection that you do in an office, going in there 9 to 5. Yeah.
That's why when I said Friday, I was with the team, we came up with stuff like the only time I could have a free conversation with them is usually when we're all in person. Otherwise, I'm too distracted on the computer. So we do our unplugged days still. So we had an unplugged day. Mm-hmm. Nobody has anything plugged in, and we just do things around town. Because most of my team is local. We don't have an office now, but most of them are local. So I miss that. I'm the one who misses it. I wouldn't mind necessarily going back to an office, but they don't want that. So I got to, I'm fine at my house. I'm just around in my basement all day doing raps. It doesn't matter to me. Whatever. I got more freedom too if I'm not in an office. But we're missing a lot of that interaction.
Absolutely. Yeah. I personally I go to the office. The office is very close to my house. I can't work from my house. I hate it. So I like the office.
Yeah, I'm with you.
But at the same time, I also like my freedom. I just spent 4 weeks in Paris.
Texas, or Paris, France?
Yeah, Miami, Ohio, and Paris, Texas.
Yeah.
That's one of my favorite jobs. You're welcome.
Yeah.
That's my job.
Well, Paris. Well, also there's Paris, Tennessee too, which is an hour down the road. So.
That's even better. Yeah.
Yeah. So I wouldn't be able to do that if everybody was in the office. So it makes it easier to do those things. So
I love that.
Yeah, it's tough to balance the hybrid for the owner. Mostly tough for the owner, because some owners, they can work remotely. They're okay with that. That's what they prefer. Some of them, they want to be in that office, them personally, because they can't get anything done at home. I can't get done at home. I mean, I have my kids at, of all ages, always around, so it's something that I don't have that balance or way to flip that off or turn it off. But also at the same time, I need that context shift sometimes too to actually get some work done otherwise. So for me, I need a physical environmental shift.
Yeah.
You need a lot of things.
I created a fake commute. I would just go on a walk as my commute and walk in the back door to come in, as if I went to the office. Otherwise, I never had any shift in the day. There's...
Yeah. At least a downstairs, upstairs office and live downstairs.
Yeah, I can't use the stairs or else I'm at home still. I got to leave through the front door and come in the back door.
No, I love that you spend most of your time on your team and spending time with your team. I think most partners, CEOs, they don't do that. They never talk with their team. And I think we'd be better off if we spent most of our time doing what you do.
Yeah. I mean, at the end of the day, if you're going to build a business to scale, you got to have a team that wants to own it and take it over. And own it doesn't necessarily need to be in the equity sense of the word, but they need to want to come up and show up every day and do it. And if you're not spending that time on there, I just don't see how people will retain that for very long. People change jobs pretty quickly, and that retention and that replacement cost is pretty costly, especially in today's environment.
So Ackerman likes to ask, what's your North Star? I'm going to ask you, what's your East Star? And why East?
So that's pretty good. So when we actually were coming up with a business name, the way Compass East came about was we could not decide on like anything that we wanted, and a marketing person that we hired just had like, she just came up with like a list of like thousands of domain addresses, and we came across one, compasseast.com, and we could buy it, and we're like, well, that's actually a good domain address because we wanted a .com at that time. You know, we thought like, well, that was gonna, whatever our rationale.
I think some people still think that.
Yeah, that was our
Some
rationale.
people do.
Yeah. So when it was Compass East, we backed into the acronym Entrepreneurs Accounting Solutions Team. That was originally, we were like, okay, that's good. And then somebody created a logo, and the logo we thought it was kind of cool. So that was the original branding, the original tagline of the business. But then as we grew up the business, we wanted to get away from so much of the entrepreneur word, because sometimes it can be thought of as like too small, or like a one-man army, where our businesses, we were kind of growing them up. So that's how we got Compass East. We also early on looked at it as, you know, East, you're looking forward, right? Like, you know, rather than North, everybody talks about you want to take your profits north, right? North Star, but East, you're looking forward. That's my pun, corniness to it, but.
So I got a good acronym for this episode: Accounting Soft Skills.
There you go.
That's your acronym for you, Ackerman. Ass.
I got it.
The ass episode.
John
That's Ackerman's episode. That's going to be Ackerman's episode.
John's ass.
Yeah, John's ass.
Yes.
There we go. It writes itself.
Drop
the rap for John's ass right now. Let's go. Put it in here.
Ooh, I can't wait. I can't wait to print it out and put on my mom's fridge.
Okay.
That's how. But I got an episode called Big Energy. I mean, there's a.
It could be worse.
It
could be worse.
Yeah, it could be a lot worse.
So what are you most excited about it in the business over the next year or two?
So right now I'm most excited about filling out this team that we've been working a long time to fill out, because now I'm really looking forward to pulling myself out of the client work to really kind of really pull ourselves out and where we can see to grow the business. And growing the business is going to continue to be organically, but it can also be in, you know, potential other areas with M&A down the road as we start looking into that, to really, you know, take our model and what we worked so hard to build to expand upon that. So that's really my immediate excitement, is to actually start being, you know, more of an outward facing CFO or CEO. Been doing it, you know, internal with our team, but personal branding standpoint, I'm probably like the worst. I'm like, you won't even find me on the internet. Like, you know, I don't even have an Instagram. I think I was posted on Facebook one time 20 years ago. So,
probably good.
So, yeah. So
yeah, I'm trying to build mine up. I don't like it. I don't like doing it, but I have to for this damn podcast and this rap. Gotta do it.
Yeah. So getting out there on like a brand standpoint, get awareness, you know, for what we've built is really going to be the next thing. You know. Yeah.
All right, give us one piece of advice for other CPA owners or accounting owners.
One piece of advice.
The biggest piece of advice.
Well, you guys, I think one of you mentioned your self-worth earlier, and I saw this quote. I think maybe it was my therapist that told me about it, but
all right.
And
I love this.
This is where we drop our better help.
So, it's pricing. You could look at this with your pricing. You could look at this with your, you know, any client that doesn't want to work with you anymore or is confused about it. And they also look at this from like a heartbreak standpoint, or anything with your culture. It's like, don't let somebody else's confusion of what they want cause you to get confused on what you're worth.
I love that.
Okay. Yeah, don't define yourself by other people's expectations.
Yeah. Absolutely.
I like it. Yeah, I just recently read a book that basically who we really are is what we think others think we are. That's who we really are. It's what we think. So what I think you think of me is who I really am.
Yep. Absolutely.
Not what you think of me. That's not who I am, because I don't know
think of
what
you as a
really
rapper?
think. I hope so one day. I hope that the next time you think of a rapper, you think of me. That's my goal.
Yeah.
I don't know if I'm there yet, but it's getting better.
In a
I got booed off stage today, but not tomorrow.
Listen, the rap was excellent.
Yeah, it was amazing. Yeah.
You got to encourage me if I'm going to keep doing it. You can't just tell me to shut the up.
You need to have like a one verse with a hook and then be done.
So
with
what's going to happen is all three of those verses are built around the verse ending with an exclamation mark and the hook, so they could all be their own TikTok video.
There you go.
Right? They're all short in and of themselves. They're all less than a minute, and they're all good enough. So they basically got 3 for one. They did not ask for a rap. Let me clarify this. Giraffe bought an ad. And
they
they
didn't put an RFP out for that, and you're the one that
no
won?
one asked for it.
They did not ask for this. They just gave me copy, and I thought the copy was lame, so I repurposed the copy into a rap and created a artificial timeline for me to do a new rap. So this is my deliberate practice. Nobody asked me to do this, but
Are you going to debut the music video at ZeroCon?
So I have 3 raps right now. By ZeroCon, I might have the one that I've been building up to, and that's
if you don't perform all these raps
probably going to be the
ZeroCon,
real Slim Shady.
It's going to be.
It's probably going to be the real Scott Shady. That might be the. That's what my wife calls me, Slim Scotty. No, not Scott Shady. Slim Scotty. She calls me Slim Scotty.
It's been a pleasure to have you on the podcast.
You're begging for those cease and desist letters.
I'm waiting. The next one's going to be Lil Baby though. The one I'm working on right now is about saying no more to opportunities and saying no just more, and it's a Lil Baby song. Whoa. I've repurposed whoa into no. This is like
okay,
weird.
John. It's been a pleasure.
All right. You as well.
John, I enjoyed it, man. I like the
good.
soft skills talk. This is my favorite type of episode. We don't talk about it enough.
You were great. I'm sorry Scott interrupted you 100 times.
Breaks it up. I don't need to.
Let's just
remember,
be
I don't
clear.
need to.
Let's just be clear. I didn't. He interrupted himself. You interrupted yourself. You said giraffe. You said the word.
I did.
The safe word.
I did.
Let's be clear. All right, John.
I'm gonna have to tell those guys I'm gonna need a cut of that.
Yeah, well, I didn't get paid for the rap. Let's just say that they didn't pay me for the rap.
They will though.
They just bought an ad.
All right, John.
All right,
Take
guys.
care.
Well, pleasure.
Peace out.
All right.